Welcome to another market update. We've made it to June of 2023, and we have good news, and we have some not so good news, and we have some kind of normal news. I wanted to start out today with a question for you guys. So we're seeing prices rise again, and rates are back up to as high as they've been in my history, my memory. So is now a good time for people to buy real estate?
I think the answer to that depends. It depends on your situation. If you're throwing your money away on rent every month, then probably now is a great time to buy.
Harsh, throwing your money away on
rent. That's how I feel about it.
Yeah.
And yet you do have to have a little bit of a down payment. So there's timing for that. Not as much as most people think.
True.
But the best thing that people can do is call us. Usually what we find is the best time to buy a house is 5 years ago.
It's like planting a tree, right? When's the best time to plant a tree?
Yeah,
20 years ago.
Yeah, the second best time, now.
Right now.
Yeah, it's a lot like that.
Okay, so Ken, what's your thoughts on buying now versus waiting?
Well, I'm sure my opinion's tainted based on what I do for a living, but I absolutely think now is better than the future. I think prices are going to continue to go up, and I do think rates are peaking, and going to head the right direction as inflation continues to come down. Rates will as well, and the cost to refinance in the future will definitely be offset by the appreciation you'll gain. I think housing, especially in our area, is going to continue to work in the seller's favor.
Yeah. Are you seeing any refinances right now?
Very little, usually need-based, meaning divorce or something like that. If somebody really wants to pull out cash, I'm seeing second mortgages done, and we're definitely doing, a decent amount of those, but they're smaller, of course, because people are just pulling an X amount of cash out and not wanting to disturb their 3.5% first with a new 7% second. So, yeah, refinances has definitely slowed down. It's all very much purchase-based, and then, like I said, home equity lines of credit or second mortgages.
Cool. So, advice generally almost always stays the same. Don't try to time the market, right? If you're gonna buy a house, right?
I think time is the enemy.
And if you're unsure, call us.
Yep.
That's what we do.
Yeah. Okay, so before we move on to stats with Heather, I want to bring up one more thing that's kind of like not the best news in the world. Homeowners insurance. So State Farm is no longer doing homeowners policies in the state of California at all. So ramifications there for people. One thing to consider is just to make sure like more people are going to be going towards this California State Fair Plan.
Yeah.
I think it's called, right? So just making sure that when you do go into escrow right away, you need to jump on homeowners insurance. So what else should people be aware of with this kind of new change that we're seeing?
Yeah, with State Farm pulling out of new policies, they're honoring policies that are already existing, and
That's
even
good.
somebody that's in escrow and had a quote and found that quote, they're honoring that. But there have been some other smaller companies that have already pulled out of California. So related to our escrows, exactly what you just said is get a head start on your insurance quotes right away as soon as you open an escrow. As far as the overall ramifications for everybody in California, we're likely going to be seeing rate increases for any insurance companies that do stay. And California Fair Plan currently is anywhere from 2.5 to 4 times the normal cost of a homeowner's insurance policy, and they only cover fire, so you still have to have your homeowner's policy. We've always said homeowner's insurance, fire insurance, interchangeable term, but with the Fair Plan, it's actually not. They cover the fire, and then the homeowner's insurance company covers the rest of it, so you have two policies. So probably going forward, the biggest impact is going to be cost. And then making sure that you're working with a realtor if you're buying a house that helps you with getting insurance quotes straight out of the gate, or at least giving you that advice so that you don't find out at the tail end of your escrow that insurance is going to put your monthly payment way over what you expect.
Okay, that's enough about boring insurance. We jump into stats.
Yes, handy dandy stats. These are for May of 23. taken from the California Regional MLS. And we were just talking about this morning before the video that you might see on social media that somebody has slightly different stats than what we have. It depends on if they're pulling California, it depends on if they're pulling just our county, it depends on if they're pulling all categories of residential or if it's just residential, single family. So for our stats every month, we pull the same thing, residential, San Luis Obispo County, what has recorded through the California Regional MLS. And so what we saw was a little bit of a price correction from what we had last month. We're at $830 for the median price now, but that's because we had 2 months that the prices just shot straight up. And so since January, we're up $80,000 on our median price. For the days to sell, it's lower now. 27 days on the market is the average, and inventory is lower than it has been since this time last year. It's back under 4 months again. And we had more listings, but they just all went into escrow.
Yeah. That 27 days in the market doesn't necessarily, like, I think there's some things that data doesn't always show. Like good houses that are priced well are selling faster than that.
Yes.
There are just some houses that aren't, not in the best condition or maybe not priced very well, and that is kind of dragging out that days on market. But the market is actually moving faster, I would say, than that.
Yes.
That number.
Or they're high-end ranches that just take longer to sell because it's all the residential data. Even some of the 55 and over neighborhoods take a little bit longer to sell. But if you've got your 3-bedroom, 2-bath in town and priced well, then we're back to putting the brakes on accepting an offer too soon for our listings and making sure that they're exposed to the MLS for at least 5 days, sometimes a little bit longer, so that all the buyers that are going to make an offer have the opportunity to make an offer. Our last listing that we closed had 8 offers. So we are back to that list and then hold, and the days on market would be even faster if we weren't holding back for more offers. And then the last stat that I have is 279 total closings for the month, which is up considerably from where we have been for the past few months, and it's almost as many closings as what we saw in May of last year. So even though inventory is lower than it has been for a year, there have been more listings coming on the market. They're just going into escrow and closing so fast that it's keeping the overall inventory low. But you shouldn't be discouraged as a buyer that inventory is even lower than before, because the reality is there have been more listings coming on than we've seen in months, so there's plenty of opportunity out there to find the right house.
Cool. Can we move on? Are you done talking?
I'm never done talking.
Okay, Ken, give us some good news.
From a micro level, the good news would be that this week rates have improved, but that's after 2 very bad weeks where bonds fell off a cliff, which makes rates go up. So conforming rates are well into the 7s. I'm seeing between 7.25 and even 7.5, depending on qualifications in the specific scenario. Where jumbo is still better, which is in the high 6s. But again, compared to a year ago, quite a dramatic difference. Inflation does appear to be going the right way from everything I read and listen to, which will help rates improve. So back to the topic of when's a good time to buy, I still think time's the enemy. And what you just shared in January to now, we've had 80,000 increase in the average price. So if in 5 months you bought now and 5 months later you were able to refinance to a better rate, you should certainly have plenty of equity to offset the small cost of the refinance will generate.
So no real good news, but we were kind of hoping, at this point that we would see rates coming down a little bit, but we've also been saying that, hey, things are volatile. We don't actually know what's going to happen. The last seminar that Heather went to, the last real estate seminar, they said, hey, expect rolling recessions, right? It's just going to be up and down, so it's not expected. We didn't expect to be where we are right now, but that's where we're at.
And this morning, to a report that I listened to, there was a fair amount of recession indicators. So it's still like a pending recession, which typically helps interest rates as well.
Yeah.
And as inflation continues to go the right way, that really happens with a recession. We should see hopefully a correction in interest rates.
Yeah. Okay, Heather, I can feel it. You need to talk again? Okay, go ahead.
Like I said,
the floor is yours.
The only thing I would go back and say is I said throwing your money away on rent, and I don't mean that to come across as judgmental in any way. The first from 2009 until 2016, the first 7 years of Platinum Properties, we leased a building. We leased a small building and then a little bit bigger building and then a little bit bigger building, and we were growing and not feeling financially ready to make a purchase for our building. We probably were ready sooner than what we actually did and pulled the trigger. But now that we pulled that trigger 7 years ago, I do look back and I wish that we would have done it sooner. I do believe we were throwing our money away on rent, not those first 3 years when we were trying to establish our business, figure out what we needed, and we really didn't have very much capital. But and when we did buy it in 2016, it didn't feel like we were ready. It felt like, what are we doing? How are we going to make this big, huge payment? But now that payment has stayed the same as the rents have risen, and we're in a much better position financially because of having made that purchase. So it's with that perspective that I say throwing your money away on rent. So it's appropriate to rent when you're in a situation where you have no down and you're just establishing yourself. But most people wait for too long and you're helping somebody else build equity instead of yourself.
Well, I think that's pretty dang hard to argue with, and probably a good place to finish this off unless anybody else has anything else to add. All right, well, enjoy June 2023. It's going to be a great month. See you next time.
Bye.